Okay, so good morning.
Japan's another
Let me
not completely rule out sales.
Let me just go through yesterday's session. Let me just turn down the news feed there. So, yeah, pretty tricky one yesterday, I would say, from an equity point of view. Strong moves to the upside in the end, certainly led by US markets in the afternoon. Punchy move, definitely after weakness we'd had in the morning, and the S&P, this level down around 2062, very powerful. You can see it here on the daily chart. That was the low we had from last week, or the 9th of June, I should say. Powerful reversal, big move to the upside, closing the gaps, further upside overnight. But you can see on this chart, just getting things in perspective, this is still a market that is tracking sideways within this kind of pennant formation. The downward trend that we have on the top side of this pennant's pretty clean and accurate, taking in the various tops over the last month. So we are still within this pattern, and resistance provided right on the 2100 handle. So anything up towards 2100 becomes very important technically. Let me zoom in a bit and have a look at like a 1 hour chart. Looking at yesterday's session with weakness in the early phase of that European morning. Key test to the low from the day before, but if I just zoom back, you can see that's the 9th of June low. This is the important one. Then the drive higher off the cash open, a test of the key level around 2082. This was Friday's low. It was Monday's high. And that break of that level, technically positive, led to that follow through to the upside, and this has been added to this morning as we climb up ever closer to that 2100 handle, which seems to be a price point that this index just cannot get away from for any meaningful period of time. So thinking about the catalyst behind this move higher, because it was a pretty tricky one when on the Greek front, we certainly didn't get any positive developments, and if anything, further negative developments. So this made this rebound yesterday afternoon all the more surprising, especially when you think about the fact that we got some, I guess it was mixed data in the end, so some bad housing starts numbers, but that was offset by the building permits numbers. Just thinking about Greece, just a bit of an update. I say that we didn't get any positive developments. Well, the last kind of comments we've had from each side, so Juncker, who's president of the European Commission, which is one of the three creditors, he accused the government in Athens of misleading the Greek people about proposals by creditor institutions. This is reference to the fact that Tsipras in Parliament yesterday suggested that creditors were looking for a 10% hike in VAT on electricity. So Juncker's saying he's misleading the Greek people with that kind of comment. The other thing that Tsipras said in Parliament yesterday, which was fairly extraordinary, he said that the IMF and the European Central Bank, he denounced them for trying to humiliate his country and accused the IMF of criminal responsibility for the country's economic woes. So if we needed more evidence that these parties were still at loggerheads, we kind of didn't really need more evidence, but we got it. This meeting is tomorrow, the Eurogroup meeting, and as it stands, of course, both sides still look to be deadlocked. What happened yesterday afternoon, I guess we did get a comment from Merkel. She said, unfortunately, she saw no sign of an easing in the deadlock between Athens and its creditors, but she did take a bit more of a, consolatory tone, and maybe her comments helped to stave off the panic a little bit. But this doesn't lead. The news flow on Greece yesterday certainly didn't point the way to equities rebounding as strongly as they did. When you think about the DAX yesterday morning, it was down over 1%. but by the time we got to the close, we were all the way back on new highs. So this morning's quite important, just looking at the DAX, in that we hit the high point of the week set right at the beginning, Monday morning's high right on the open, 11,119. We've hit this a couple of times this morning, and then we sold off relatively steeply. But you've got to assume that. Well, I guess it is difficult for European stocks, because if we let's get the DAX on a daily chart. I'm thinking about this more sort of medium term. That move yesterday morning took us below the June the 9th low, below the 38.2 fib. That made it a new, whatever it is, 3-4 month low, 12-13% off the April highs. So, even though we got that rebound yesterday, we're still very much within this downward trending scenario. And I guess you can't forget the fact that you got the ECB in the market, not directly in the equity market, of course, directly in the bond market, but of course this means cash onto bank balance sheets. And where does the cash go? Well, perhaps some of the movement yesterday afternoon was a QE effect. Perhaps it was some of this liquidity getting shoveled into what is now a much cheaper stock market relative to where we were a couple of months back. But I say cheap, that's a dangerous word, because for the DAX we had a phenomenal surge higher. If I go to a weekly chart here, the 50% move that we had from October last year to April this year, you can't call this market cheap at 11,000. But maybe there's a certain element of don't fight the ECB. Now that the DAX has sold off a good decent chunk, 13%, perhaps there is a bit of QE money getting funneled in here. So perhaps it's going to make this Greek trade on European stocks a little bit more difficult. But despite yesterday afternoon's surprise rally, I would still have to stay with a bearish outlook, even though that view certainly didn't work yesterday afternoon. I think we are approaching the key moment in this Greek saga, and as it stands, the key moment's going to turn out to be negative. But we'll see. More headlines to come, you can be guaranteed of that. But we are seeing, the S&P's pushing higher here, so then you've got to switch your attention to tonight and think about the Fed. And is a lot of that move yesterday on the S&P, is that about pricing out a September hike? Looking at the dollar's value, you perhaps wouldn't say that. It's not like the dollar weakened yesterday, which would be a pricing out of the September hike move, dollar weakness, as people lengthen their interest rate hike expectations and push them out to, let's say, December. But the dollar didn't particularly move yesterday afternoon. It was quite a choppy period yesterday afternoon. We had a fairly violent morning with a big spike up above the 113 handle, and then the full retracement. But in the afternoon, things settled down, and in fact the dollar finished up on the day. So that doesn't make sense, the argument that people are pricing in more like a December hike. So a bit confusing, I would say, all in all yesterday, looking at the different assets. And a tricky session with a counterintuitive move on European equities particularly. So that's the update on Greece. Both sides still blame, it's the blame game, and we're unlikely to get any kind of change on that. Let me show you something just to remind you. This is something the FT had this morning. This is Greece's debt payments for 2015. So we've got upcoming payments, 1.6 billion short-term treasury bill, so T-bill redemption payment end of this week. The 30th of June is the big one, in that this is where Greece rolled up their June IMF obligations and were allowed to push them to the end of the month. So these have all rolled up into one big payment on the 30th of June, 1.544 billion. So, and then moving into July, by the way, if you think June's a big obstacle for Greece in terms of debt repayment obligations, well then, just check out July. Don't think this problem is going to go away, the July obligations are way in excess of the June obligations, and so we're looking at some small hurdles in June that may well be hurdles that are too high, so forget about these giant obstacles that are coming the following month. So this is the, and let me just see, actually there's overdue here, let me just take that screenshot off, click onto the overdue. Alright, on the overdue section it says Greece has not defaulted on any payments. Okay. Well, I guess that's technically, is it technically right? I mean, they owed money to the IMF earlier in this month and they didn't pay. So yeah, okay, fine, they've pushed it out to the end of the month, but I would, we'll see. We'll keep an eye on this page. As soon as we get to the end of June, maybe the text on this page might change, in which case we're in for a bit of a roller coaster ride. So this is an update on Greece. Let's have a look at the data calendar for today. So really focusing in on the UK to start with, a whole raft of data at 9:30. Firstly, the Bank of England minutes. So this is the finer detail from their meeting 2 weeks ago at the beginning of the month. So we're looking for the vote count here. The MPC, the Monetary Policy Committee, has 9 members, and it's a democratic process. They all vote at each meeting. Do they want to change rates? And it's been 9-0 really for much of the year. If you go back to the end of 2014, it was actually 7-2. 7 for unchanged and 2 wanted a rate hike. Those two people, McCafferty and Wheel, changed their minds as we hit 2015, and so it's been 9-0 for the last few months, and we expect it to stay at 9-0. Okay, so that's an important one. Let's say it's 8-1. Let's say one of McCafferty or Wheel, or let's say both of them, they do move in tandem. So you're probably more likely, if you're going to get a change from 9-0, it's probably going to be more likely 7-2. So that would be a hawkish development, and cable would push to the upside. Sterling would appreciate. However, we'll see. In terms of the employment numbers also coming at 9:30, loads of them all being dumped on us at the same time. You get things like the unemployment rate expected to stay unchanged at 5.5%. Let me show you the unemployment chart. We've had a very, very steep decline in the unemployment rate in the UK over the last couple of years. We're not expecting that decline to continue today, but we expect it to remain at these multi-year lows. So that's the unemployment rate. That's probably not going to have too much of an effect, even though Rand's got it in bold here. I would say that's not perhaps the number to be watching out for. We get the jobless claims change. So we're expecting it to be minus 13.8 thousand. The more negative, the better here. If I show you so this is like the claimant count. I'm going to show you the chart here of claimant count. So the more negative, the better. Okay, some of these huge negative numbers over the last couple of years. That's the quite rapidly improving unemployment situation. So this is measuring the change in people claiming unemployment benefit, okay, or the number of people unemployed. So the change compared to the month before. So of course the more this number drops, the better. That means the less people in the unemployed situation. Okay, we've had a bit of a bounce back over the last couple of months. It's still negative numbers, of course, which is what we want to see. We're expecting something similar to last month, minus 13.8 thousand. Okay, to continue this strong run of form on the unemployment front. Also, average weekly earnings will be important. This is April data. That's the only problem with these weekly earnings numbers and the weekly earnings ex bonuses. This is April data. We're at the end of June. Well, no, we're not. We're in the middle of June, but so this is reasonably old, but it's still important. We're actually expecting a lift on this, 2.1%. That's an increase on last month's 1.9%. The higher these wage numbers, the stronger it is for the value of sterling. Thinking about rate hike expectations, it's all about when's wage growth going to come through. And as soon as we've got signs that wages are beginning to improve and increase, this is when we're going to start to price in the Bank of England rate hike. Okay, So these wage figures are important, even though they're relatively old. Right, so UK focus at 9:30. Then we switch to the European inflation data at 10. So CPI data, we're expecting it, well, month on month to be unchanged at 0.2%, year on year plus 0.3%. Here's the chart for, let me just get the European CPI chart. We had, I showed you this chart yesterday when we were talking about the UK data. So we've seen a really sharp rebound over the last few months. This is a big move in 5 months to go from minus 0.6% to plus 0.3%. It is a pretty big reversal. We're expecting confirmation of this reversal, and that we're expecting the same number of plus 0.3%. All right. We're not expecting a further increase in inflation to continue the trend of this last 5 months. Of course, if the numbers come in higher than expected, especially if they're, let's say, 0.5%, that would be the highest reading for a whole year. So let's say you got a 0.5% reading, well then this is going to be positive for the euro. You might expect it to be negative for the Bund. Ironically, I say that because you've got to think about, no, not ironically, sorry, it's straight out negative for the Bund. Sorry, I'm getting confused here. That means inflation higher, that means yields on the long end need to rise, which means the Bund needs to move lower in price. Also thinking about the ECB's QE program, are they going to deliver it in full as promised? Well, they might not do if inflation rebounds really sharply or continues to rebound sharply. We might, months to come, if inflation continues to rise and get more positive, and as we start to prepare for the transitory effect of the oil price drop to come out of the equation at year end, then you might get people starting to think about the likelihood that the ECB are going to cut their QE program short. So that's bad news for the Bund as well, of course. So the higher the inflation rate here, the better it is for the euro's value, the worse it is for the Bund's value. Then vice versa, of course. If you see inflation, let's say it drops to zero, that would then paint a different picture. We've had a strong rebound, but perhaps that was just short term, and we're going to get back to more sort of flat or even negative. So you get the opposite movements as a result of that. So Eurozone inflation coming at 10 o'clock. What else on the calendar going into the afternoon? Unfortunately, there's nothing out of the US until we get the Department of Energy oil inventory data. Just to update you on this, last night we had the API numbers announced, and the figures showed a drawdown again, so another drawdown, minus 2.9 million barrels for crude. Gasoline drawdown of the same amount, minus 2.9 million barrels. Cushing inventories did actually increase though. Let's look at the oil chart, and last night, it's kind of flat. We're still trading the prices we were right now just before the API numbers were released. We got a little bit of a lift as the numbers and the data came down the wires. We pretty much got to the high point from earlier on in the session that morning, up around $60.37, and then we just pulled back in. I think that Cushing increase, even though it was only a tiny increase on the Cushing inventories, just offset the more general drawdown we saw across the inventory space. So poised for Department of Energy numbers this afternoon. But of course, the big event of today is none of the things I've currently talked about. It is, of course, the meeting tonight. It's the FOMC. I should say the meeting, yesterday and today. It's a 2-day meeting. Finishing today at 7 p.m. will be the statement release. And then at 7:30 p.m., this is where Yellen is going to be talking. Also, just trying to steal her thunder, Christine Lagarde, managing director of the IMF, has also chosen to make some comments at exactly the same time. So thanks for that, Christine. Thanks for your scheduling. So at 7:30 we're going to get both Yellen talking about Fed policy, and we're going to get Lagarde talking about Greece. That's a pretty interesting cocktail. So we'll talk more about the Fed later this afternoon, okay? I'm just watching European stocks coming under more pressure here. I mean, yeah, not surprisingly, not surprisingly, because that rally yesterday probably was more about just getting dragged up by the S&P more than anything else. So, yeah, the Greek situation should remain the dominant force on European equities. This has to be the case as we move towards Thursday's meeting, and then potentially this meeting over the weekend, and then potentially no deal and capital controls being implemented in Greece, and then the uncertainty and the chaos that ensues with an imminent default and the risk of an exit from the Eurozone and so on and blah blah blah. So surely you've got to expect European stocks, despite yesterday's rebound, to remain under pressure, unless you get some kind of remarkable turn of events where suddenly a deal looks likely at tomorrow's meeting or at the weekend's meeting. Okay, so that's it for now. I'll talk Fed this afternoon. We'll prepare for that in detail. But for now, let's focus in on these movements here off the European Open, plus then UK data coming in 30 minutes. Enjoy the session.